Good morning, ladies and gentlemen. This is Butch Shorak bringing you Market Forecast, brought to you by Options University. It's Monday, December 30th, 2013, the last market forecast for the year. And with that, remember, access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We are not implying or guaranteeing any profit, and as always, do not trade with money you cannot afford to lose. Looking at the indexes for the week, we see that we had another banner week with looking at the Dow, the NASDAQ, the S&P 500, Russell 2000 in that order. We see all positive numbers, in fact, big positive numbers, as we see the percent change of 1.6 in the Dow, the big caps leading the way. We look at the NASDAQ at 1.3%, the S&P at 1.3%, and the Russell at 2000 at 1.3 as the Santa Claus rally continues. Looking at the year, we see some lofty figures as percentage for the year. The Dow up 25%, NASDAQ up 37%, S&P up 29.1%, and finally the Russell coming out at 36.7% as the beat goes on. The Santa Claus rally certainly continues as we look at exactly what's happening in the market to bring out 2013 and bring on in 2014. As we look at the big caps leading the way, why should we not be bullish? The latest GDP numbers came in at 4.1%, which is the best we've had in a couple of years, in fact about 2 years, and at the upper end of the range for the last 10 years. Unemployment rate is near a 5-year low, and it's no wonder the market continues to act like all is well in Mudsville. Looking at the week to come, what kind of economic announcements do we have coming on Monday? Today, we have pending home sales coming in at 10 o'clock, Dallas Fed manufacturing survey at 10 o'clock. Tuesday, on this shortened week, as we see New Year's coming into play, we see the Chicago PMI, the Case-Shiller taking place, all before the market opens. Consumer confidence coming in at 10 o'clock, all of which we expect to see decent numbers coming from this. New Year's Day, all markets will be closed in honor of bringing in the new year, and we'll watch January carefully, as January will give us a time to renew or adjust our bullish or bearish convictions. It can create reversals, but the savvy trader understands that it's time to carefully evaluate what happens in January, give us an indication of where the market go for the coming year. On Thursday, we have our jobless claims, which take place every Thursday morning, giving us our weekly numbers from the week before. PMI Manufacturing Index also before the market opens. ISM Manufacturing Index coming in at 10 o'clock. Construction spending coming in at 10. So quite a day on Thursday as the market begins the 2014 year. Looking at Friday, not much happening on Friday, as there's very little there that will be of interest as far as making the market move. I notice we have a number of Fed's governors speaking, but that in itself, they're very careful as to what they say. All right, well, with that thought in mind, let's take a look at the SPX and see as the beat goes on. Here's our Christmas rally. It couldn't be any more definitive as to what's taking place. Here was the Fed meeting. Obviously, the influence that it had went all the way from the 50-day moving average, came down to that 50-day moving average, and is moving up to the top of that Bollinger Band. Will we have a pullback? Sure, of course we will. That's what markets do. They ebb and flow. They ebb and flow. We're at the top end of that flow, and it will ebb back somewhere between the 30 and the 50-day moving average. But at the moment, certain things certainly look like they're moving forward. Looking at the week that just took place, let's take a look at that. We see that the week just kept right on climbing, moving up. We hit that number 1840, which I didn't expect to hit till January. Obviously, we're already there, and there seems to be nothing but blue sky ahead for the SPX. Now, with that thought in mind, well, what can we expect to take place? Well, we're in certainly a bull market, and after the S&P has a 25% gain, historically we look back, and 2/3 of the time, the year following a 25% gain is a positive year in the market. So we see see money flowing in. We see the retail investor getting involved at a range that he hasn't been at since before the big pullback. So all is looking rosy. In fact, maybe too rosy. But the truth of the matter is, if the economy cooperates and corporate profits keep coming, we're in for more from this bull market. Looking at the Dow, what do we see? We see all new highs, 16,478 was our close. As we're headed for, are we headed for that 20,000? Well, that's the direction we're headed for. Will we see that this year? Probably not. Looking at the NASDAQ, what do we see out of the NASDAQ? Not at the biggest highs it's ever been at, but just keeps right on chugging along as we see another breakout coming out of the NASDAQ as the Christmas rally continues. Russell 2000, again, overextended, a long way away from the 30-day moving average at the top of the Bollinger Band, but we'll have a pullback somewhere between the 30 and the 50 at some time in the future, but the beat goes on as we continue in this bullish market. Looking at the VIX, we see that we have a pullback down into that 12 level again as the market heads up. The VIX, of course, pulls back again at our lower area of our range, and so therefore we can expect shortly some kind of small pullback to give us the ebb and flow that we get out of the markets. Looking at the bonds, our bearish market, and we can expect more bearish times. In fact, we can expect that we're going to get a breakdown from this level of support at 101, and we're headed down for lower numbers in the 20-year Treasury bond. Looking at gold, well, let's take a look at gold and see where gold has put us. And no big flight to safety as gold, again, in lower numbers. Looking at the SPY for the past week, let's see what kind of volume we had. Oh, here we are, Christmas week, and look at that volume fall off as the big boys are on vacation. All right, with that, let's take a look at the financials, see if they followed the market on up into new highs, which we certainly would expect, and that is exactly what we got. Is the financials look very much like what the S&P looks like. Looking at oil, we see that we've had a bit of a build-up. We were talking about, are we going to get under $3 a gallon? Well, obviously they fixed that, as oil has had a bit of a jump here as it follows its topsy-turvy, but maybe just setting up a sideways trend here in oil. All right, next let's take a look at one of our other ETFs to give us an idea of what the sectors are going, and we'll look at that when we look at our stocks to watch. With that, for your gold members, stick around. For those of you that are not gold members, for more free videos, go to www.optionsuniversity.com/free gold. So with that, this is the first and last broadcast we'll have for the month of 2013, and wish you a very happy new year and a very successful 2014. This is brought to you by Options University. It's Market Forecast. This is Butch Shorak. It's Monday, December 30th, 2013, and thank you for being here.